FXCOINZ, this is Christopher Lewis taking a look at crude oil and natural gas markets. The backdrop for energy at the moment is very interesting at the moment because we have a dichotomy between supply and demand in both major energies. And of course, we have some geopolitical aspects to watch out for as well. So, for example, one thing that's going on at the moment is the very real possibility that the United States of America will launch an attack on Iran. So that brings a little bit of concern when it comes to supply of crude oil, whether or not the Iranians tried to shut down the Straits of Hormuz, or maybe if the Americans damage some of the infrastructure in the Iranian homeland when it comes to oil. Natural gas has a little bit different situation in the sense that the United States has seen a fairly severe winter, and that, of course, has drawn down a lot of the supply. Europe has its own world of issues, although, ironically, in January, the European Union imported record amounts of Russian liquefied natural gas. So, as usual, the natural gas market is very convoluted. So, let's take a look at the technical analysis. The light sweet crude oil market has shown itself to be a little bit choppy over the last couple of days. And on Tuesday here, it looks like we're hanging out in the middle of the range. The $66 level above is significant resistance. And if we can break above there, I think we can take off towards $70. I do see a lot of support underneath current levels near the $62.60 level in the form of the 200-day EMA and the $62 level, as it has been important multiple times in the past. That being said, if the U.S. strikes Iran, I would expect a significant spike, not only here, but in other grades such as Brent. The natural gas markets are flat on their back as we are sitting just above the $3 level, and that has some retail traders confused because number one, this is a U.S. contract, so I think a lot of people forget that. But number two, the $3 level offers a bit of a floor. While it is cold out, we are trading the March contract, and that means we're starting to look towards spring. There's a very real world in which we get another spike between now and rolling over into actual spring, and that probably causes your next pop higher. I would not anticipate that we get anywhere near the previous highs. I think a really strong push here could send natural gas to $4.50, but we need the weather to make that happen. Until then, this is pretty much dead money, but watch your weather reports in places like Boston, New York, uh, Philadelphia, Pittsburgh, etc. Because if we do get another Arctic blast, we could very well see natural gas jump a bit. But this would be a short term trade at best. Later, in the next couple of months, if we can find ourselves closer to $4.50 or even $5, it becomes a market that you short. This time of year, you never do that.